I'm Tom Selzer from Livewire Markets, and joining me today is Marc-Andre Lewis from CI Global Asset Management to discuss all things global private markets. Thanks for joining us, Marc-Andre.
Thank you very much, Tom. Nice to meet you.
CI is one of Canada's largest investment managers, but what would you say is the general outlook in Canada at the moment, maybe some of the recent developments that other investors aren't aware of?
Canada is far from Australia, but there are lots of parallels actually. So one thing maybe that people in this market are not necessarily aware of is how big pension funds in Canada are, right? Especially relative to the size of the country itself, right? So when it comes to market and capital markets, I mean, we have these very big institutional funds, Canada Pension Plan, Ontario Teachers, so on and so forth, and they've all been very involved in private markets for a long time. But when you turn around and you look at retail investors or even investors, I would say, with a certain level of wealth, I mean, adoption of alternatives has been extremely low. So that I think is a parallel, I think, up to a certain extent, right? And when it comes to general outlook in Canada, I mean, Canada is obviously in the midst and very close to the US. So when it comes to everything that's happening on the politics and tariffs front, it obviously is something that is impacting the country. A lot of uncertainty from that front. The economy is starting to decelerate a bit. But in general, I mean, I think it's important to distinguish always economies and markets.
Moving to global markets for a second there, how do you think global private markets have evolved in recent years, and what are the trends that investors should be focusing on?
What has happened, obviously private markets are mainly dominated by, I would say, those big institutional funds that I talked about, but also big fund managers. And what has happened, I would say, over the last 10, 15 years is the big institutional funds, the pension funds, the super funds here, are going more and more direct. So instead of using funds to deploy capital in private markets, they're doing deals themselves. And that created some void or a need for fund managers to actually find new sources of capital. So access to private markets is much easier now and much wider now than it used to be. It comes with its drawbacks or inconvenience because obviously when it's easier to get access, there's more and more, I'd say, products which are probably not of the quality that we would like them to be.
And you mentioned the big investment funds there, but what are some of the other key drivers of the growth we've seen in the markets recently?
Well, I think when it comes to privates, it's partly investors realizing that they need diversifications away from listed markets, which are more and more concentrated. We know what's been happening. I mean, listed markets as a whole have done extremely well, but this has come with two things, I would say: a concentration, so indices are more and more dominated by a handful of names. So that's one thing. The other thing is the fact that because there's been less and less IPOs and a lot of companies are being privatized, public markets are shrinking, not in market cap, but in terms of names you can get access to. So once you start looking at, okay, these markets are relatively expensive, they're relatively concentrated. If I want to diversify, where can I go? And private markets have delivered performance. They deliver a different way to invest. It's easier to manage or to transform a company when it's private than when you have to deliver quarterly earnings. So I think it's really diversification, which has been the seek of diversification, if you want, that's been driving. And finally, I would say the fact that now small investors can now invest like these institutional investors are. So that also is bringing new flows.
And on that point, private equities arguably outperformed all other asset classes over the last 20 or so years. Do you see that continuing?
I'm not sure, right? So I'll differentiate here because I think it's an important point, right? So when an asset class is in infancy, and private equity has existed for a while, right? So, but I would say as it became institutionalized and all that, markets become more and more efficient, right? So maturity brings efficiency. So I would say going forward, I'm not sure that investing in private equity as a whole, and that's the important nuance, right? As a whole, I'm not sure is going to necessarily outperform listed equities the way it did. The dispersion in performance in that space is massive. So I think going forward, it's extremely important to know what you invest in. So private equity as a whole is not necessarily as appealing going forward, but if you can get access to top managers, then, I mean, the outperformance has been, is, and I think will continue to be very strong.
And it's been a similar story for venture capital, but how do you see that sector shaping up in the, say, the post-COVID world?
Yeah, so obviously we're in the midst of a AI boom, or hype, depending on how you see it, right? I think artificial intelligence is real, but I think in general, we tend to always overestimate the impact of a new technology in the short run and underestimate the impact on the long run, right? So I think now everybody wants to do AI. Everybody feels they're missing out, even investors. So the risk there is there's going to be a lot of companies that are going to attract capital that probably are not going to deliver on their promise. If you recall, or those viewers that will recall at the beginning of the internet, I mean, the web browsers that people were using back then are not at all the ones we're using today. So it's dangerous to see and to think that ultimate winners in that space are the ones that seem to be winning right now. So a lot of caution, I would say, here. And once again, due diligence, knowing what you invest in that space. There's unfortunately going to be a lot of funds that promise and under-deliver, I think.
And just looking at the macro outlook at the moment, it's a pretty interesting time, especially in the US. What impact do you think that's having in private markets, especially in North America?
Yeah, so I talked about it a bit, right? So I would say markets are, in listed space, are concentrated. There's less and less names out there. We seem to be entering a new regime when it comes to interest rates, which is more complex than what we've had before, because it doesn't seem to be driven just by the natural drivers of monetary policy decisions are growth and inflation. And now it seems that you have to add political interference in the mix, and that complicates obviously the whole story. When you look at public markets and you look at valuations, which start to be high, when you look at concentrations, which is high, then I would say obviously all of this has helped private markets. But all of these are also, I think, arguments where investors that are solely or almost exclusively in listed markets should probably look at deploying more capital or shifting some of their capital to private markets. So I think overall should be good. But these are less liquid instruments. So when it comes to portfolio construction, people need to allocate and weigh these assets in their portfolios correctly.
And another big trend, maybe the growth of private real estate and especially infrastructure, that's back in the spotlight at the moment. Where are you seeing the growth and the opportunities there?
I said it in different form, right? I think we are coming out of an era where people were looking at private real estate, private infrastructure, private equity as a block. And I think that people now realize that what has been happening on the listed space, which is increased differentiation, is also happening in those asset classes. So you have to dig a level deeper, right? So real estate is extremely wide as a category, right? So you can buy a hole in the ground in Rio de Janeiro, or you can buy a building in Washington that is leased to the federal government for 30 years. And these are not the same types of instruments or investments, right? So I would say in general, real estate, the structural headwinds are still there. The post-COVID, when it comes to retail, the shifts have been accelerated by COVID, but you still see that when it comes to office space, also where we land. I don't know how the return to work or return to the office is here in Australia, but in Canada, we're still in that phase where we want people to come in the office, but it's not as easy as we thought, and that has an impact there. But then when real estate, I mean, data centers, for example, see a lot of capital. At some point, it's going to be too much. For the time being, we still see continuing. And briefly, infrastructure. Governments pretty much everywhere in the world now are looking at fiscal stimulus, a lot of it through these big projects, right? So I think that's going to create a lot of opportunities within infrastructure. And finally, the energy demand from whether it's emerging market growth, which continues, right, in the background, or all these AI and computing needs, the demand for energy is going to be there. So I think, again, a lot of opportunities, right, to invest and to deploy capital in that space.
I think we've covered off a lot of the opportunities there, but say for investors that haven't considered private markets previously, why do you think they should be considering it right now?
All about diversification, right? So most investors don't need 100% of their portfolios to be liquid 100% of the time. So I think we come out from this like everything has to be liquid, right? But once you reach a certain level of wealth, it's actually good in some cases to have these things where you can be more patient capital. I said it, but the ability to transform a business is very substantial in the private markets, right? You can think in years when it comes to transform, optimize a business. So I think that's another thing. The last point I would make is it's a complex ecosystem, right? There's a lot of funds that are out there trying to return capital to investors. Some of these funds have been raising money in a world where interest rates were extremely low and we're focusing on financial engineering, I would say from our side, we want to focus on operators, like private fund managers are able and have shown to be able to buy a business that is inefficient and actually extract value from this rather than just financial leverage.
Marc-Andre, thanks for joining us.
Thank you very much, Tom.
Thanks for tuning in. Make sure to check out our YouTube channel for more great videos.